like to invite our speakers, our panel speakers to the stage, please. So. So, thank you so much and welcome to our session, Regulatory Developments Promoting Finance in Africa and the Middle East. So, policy and regulatory frameworks affect the way financial institutions operate and hence also affect the sustainability and stability of financial markets, as well as social and environmental economic outcomes, of course. Most importantly, regulatory frameworks complement and build on financial sector leadership and initiatives such as the Principles for Responsible Banking, IFC Performance Standards, and the others. There has been a significant increase in sustainable finance policy and regulatory measures globally in recent years, both in terms of scope and depth. This has been particularly true for Africa and the Middle East region. Various jurisdictions across the region have taken steps to address climate risks in their respective financial sectors by issuing supervisory guidances on the management of climate risks, have explored the effects of climate change through scenario analysis and stress testing, and mandated the disclosure of climate-related information. A number of jurisdictions have also begun or have already developed green and/or transition taxonomies for the classification of sustainable economic activities. Our session today aims to explore the direction that regulation has taken and how it can support and incentivize the sustainability transition in the region. I welcome with us today our very distinguished panel of speakers and experts. Ms. Louise Gardiner, Sustainable Banking and Finance Network Africa Coordinator from IFC. Mr. Walid Ali, General Manager, Sustainability Department at the Central Bank of Egypt. Mr. Romeo Nell, Technical Advisor to the Governor Bank of Namibia. And Dr. Omamegbe, Director and Head of Strategy, SEC in Nigeria. So welcome to all of you, and thank you for being here with us. So as we start, I would like to direct my first question to Louise. So looking at the bigger picture, the Sustainable Banking and Finance Network works with numerous regulators around the world. And in Africa, Middle East region, we see also a strong momentum when it comes to sustainable finance and climate action, even if they are on varying levels. How would you describe the current state of sustainable finance regulation in the region? And what do you believe should be the role of regulation in enabling and incentivizing the broader alignment of the real economy with sustainability goals that go beyond the climate-related aspects?
Thanks so much, Nuran. And thank you to UNEP FI for this event and inviting us. I think I was at the last in-person one in Cape Town. I think that's right. But it's really a pleasure to see that this initiative continues to have momentum. So a little bit about the Sustainable Banking and Finance Network. We used to be SBN. We started out focusing on the banking sector and banking regulation, but it very quickly became clear, and we were told again and again by our members, that we had to be the Sustainable Banking and Finance Network. And a big part of that was, initially we started with banking regulators, but the banking regulators wanted to collaborate with the other regulators. So they said, you need to have capital markets, you need to have insurance, you need to have all the parts of the puzzle need to be working together. So just, I think that coincides with the diversity of this panel today, so thank you. We were established in 2012. Our secretariat is hosted by the International Finance Corporation, which is part of the World Bank. And the reason for that is the IFC had had a long track record of working with financial institutions in emerging markets to embed systems for managing environmental and social risk. So this was before climate change became the urgent topic globally. And IFC had demonstrated that managing environmental and social risk in the financial sector led to lower overall risk and better performance of the projects that IFC was financing. So we were helping financial institutions embed these practices, and regulators became interested. So we had regulators from China, Nigeria, Vietnam, Indonesia, over a decade ago, asking for assistance to create a level playing field for the financial sector, so that you don't just have one or two financial institutions knowing how to do these things, but that it's a common practice. And thanks to the success of those engagements, we formed the SBFN. And the job of SBFN is to focus on two objectives, which are identified by our members. One is embedding environmental and social risk management in the financial sector, including climate risk management, and then directing capital flows to activities that have environmental and social benefits, including climate finance. And I reiterate the environmental and social again, because we have over 3 decades of really good technical foundation for ESG. ESG is a very powerful body of work that will enable us to do the climate finance we need to do. So what has happened in Africa? Until 3 years ago, we only really had the top 6, well, I won't say top, 6 of the largest countries in Africa putting in place regulation, and we have 2 of them here. So Nigeria, Nigeria's central bank was the first in Africa to have banking principles for the financial sector. And what's interesting is it was a unified approach from the private sector and the regulator. The Bankers Committee came up with the principles, the central bank adopted them, and then as of the last few years, I believe it's expanded to cover all parts of the financial sector. So I'm looking forward to hearing more about that. And then we obviously have Egypt, which published theirs recently. Kenya was another one of the early movers. They were led by the banking sector. South Africa joined the ranks in the last, I would say, 6 to 7 years, and that was a comprehensive approach across the whole financial sector led by the National Treasury. So it started with the Banking Association having voluntary principles, and with the pensions having the only actual regulation to embed ESG. So that's the only part of the financial sector in South Africa that's actually regulated on that in terms of embedding ESG. But now the National Treasury has brought in a comprehensive approach, including a sustainable finance taxonomy, which you guys have all probably heard of taxonomies, and I'll maybe touch on that a little bit later. And then we have Ghana with sustainable banking principles, and Morocco. Morocco was very interesting. They had it was around their COP22, I believe. They hosted COP22 or somewhere around there, and they announced the Marrakesh Pledge at that time for sustainable centers of finance, particularly led by the capital markets regulator, but also the Bank Omamegbe, the central bank, playing a very strong role. So they had a combined approach right from the outset. And something that is worth noticing is the use of roadmaps, national roadmaps. Not all countries have them for sustainable finance, but we're seeing a rapid uptake. Even for those countries that had a plan early on or had initiatives early on, they're now realizing you need a sustainable finance roadmap to help coordinate all these pieces. So those are the big trends that we're seeing. And in Africa, as I said, until a few years ago, we only had 6 leading countries, and those were also more than 90% of green bond issuance on the continent. But as of the last 2 years, we've had the Central Bank of the Central African States and their capital market regulator joining, and we're starting to see some of the smaller countries get very interested in this topic. So that's what we've seen, and I look forward to the rest of the discussion.
Thank you so much, Louise. It really is interesting seeing the growth and the development that's happening in the region. And of course, having sustainable finance roadmaps and all of that, it also takes effort to include as well capacity building, understanding, and literacy. Which brings me to my next question with Dr. Mo. So last October, on behalf of the Director General, it was mentioned that financial literacy and investor protection are central to the main objectives of the Commission in driving the development of the market. So what role do you see regulators and supervisors playing with regards to financial literacy and investor protection, and how is the SEC advocating and promoting the sustainability agenda in Nigeria?
Thank you very much for that question, and again, thanks for the invitation to this panel. The SEC has a twin mandate. The first mandate is to regulate the market. The other part is to develop it. One of the key outcomes of executing efficiently and effectively that mandate is investor protection. And financial literacy, it's a key enabler to investor protection. The first part of your question talks to what regulators can do to promote investor protection and financial literacy. I think it starts with setting standards and enforcing those standards for financial literacy and also for investor protection. It also involves promoting education, financial education, and having a framework in place to make that happen, be it by the regulators or capital market operators. You also need to have, I believe, very strong disclosure requirements regarding financial products and investments, requirements around fees, around performance, requirements around conflict of interest to ensure that there's transparency, and if there's transparency, ultimately that's investor confidence, and once there's confidence, it translates to protection. You want to also have a very strong surveillance system, market surveillance, to ensure that if there are infractions and things that are happening that shouldn't happen, those things are discovered, and also there is penalty to deter future occurrence. To come back to the second question, which is really what have we done regarding sustainability, I think we've done a lot. I think Nigeria was an early adopter of sustainability. I think we actually, the first green bond, sovereign green bond in Africa came out of Nigeria. And the SEC in Nigeria played a very key role in making sure that happened. How did they do that? We collaborated with, I think, FSD Africa, Climate Bonds Initiative, and also to come up with rules for green bonds. We rolled out sustainable finance principles for the capital market. I think Louise had talked about the collaboration between the financial players with financial regulators in Nigeria. And that is correct. What we did was that all the financial regulators in the country actually came together. You have the SEC, you have the central bank, insurance regulator, the pension regulators, and others, to come up initially with what was called the Nigerian Sustainable Finance Principles. So those principles were really the building block on which every sliver of the financial sector regulator community would now develop their own sustainable financial guidelines and roll out to the sector of the market that they regulate. So in addition to that, we carried out a lot of capacity building, both within the SEC among the regulator community and also for the market as well. But however, though, we've not seen the kind of traction that we expected to see with the first couple of sovereign green bond issues. We've not seen a lot of traction regarding corporate issues. We've seen maybe a few, Access Bank, I think they're here, a couple of those, and maybe one or two others. So there were challenges along the way. I think we'll get to that as we progress. Thank you.
Thank you so much for that. Definitely cooperation and working collectively together with all the wider finance sector, and altogether this is very helpful in supporting, advancing, and accelerating the action. So speaking also on collaborations, my next question to Romeo and to Walid. So there are many guidances and frameworks out there that the finance industry is looking at to help embed sustainability into finance. What role do you see for market leadership initiatives such as the Principles for Responsible Banking, the IFC Performance Standards, and others to advance the policy and regulatory agenda in your countries? So Romeo, if you can please.
Sure, thank you. Thank you very much, and thank you also for the invitation to be here this morning. In terms of the role that we see coming out of this space to address the aspects of climate-related risk, it would take from the offset from us as regulators or central banks a lot of concerted efforts to also get industry together and to involve all role players across the industry to make this work. So what we have done is at a national level look at how we can roll this out by looking at the development of a national strategy. And these are works that are still in the pipeline. And from that, I think, unlike what the other countries have done, Nigeria, Kenya, and the colleagues from Egypt, to also come up with certain guiding principles that we can actually then roll out to the industry to allow them to adopt. But those are some of the efforts that we have made thus far in strengthening the regulatory environment, but also making sure that we collectively get to achieve the objectives that are set internationally. I think from the onset, I also have to say, for us in this space, we are infants. So we are also learning from many of the other countries that have gone before us. We certainly are not saying we know it all, but we really would want to learn. I think that's probably in my first comments that I can start off with. Thank you.
Thank you so much, Romeo and Walid.
Thank you, Nuran, and thank you for the invitation with this distinguished panel. It's our honor in CBE to be joining the event in the beautiful city of Windhoek in Namibia. Well, actually, regarding your first question, Nuran, there are a lot of frameworks and initiatives, and that's created a lot of confusion to many institutions. I'm speaking here today about real examples of banking sector in Egypt, and I'm sure that many others will share the same thoughts. So, what the role of Principle for Responsible Banking that we see as a very important framework that is really relevant, that's already many of the principles, or most of the principles, are already taken care of by bankers in their daily work already. But the thing is that they were not introduced to them, that this is a specific framework that you need to follow with certain measures and certain actions in order to comply. So it is a two-way journey, we as a regulator and the commercial banks as well. So when we started to do our homework as the Central Bank of Egypt, we looked to those principles, and we started with them as a base of our regulatory framework. So you see how crucial it was for us. And of course, with a lot of support from our dear colleagues in SBFN as well. So we made this as a base for us, but also we asked the banking sector to work on the principles for responsible banking as a base in their understanding about sustainable finance as well. So we could meet in the middle. We are type of an institution that issues a regulatory framework that works on the ground and makes results. Unfortunately, in this field, many of the regulatory frameworks worldwide has been just to be issued and to be recognized that this institution has issued something related to a specific topic, which is not the case in our situation. So I'm proudly here today to say that 75% of the Egyptian banking sector portfolio in total is following and signatory of the principle for responsible banking, which is a big number. Thank you. And definitely, as a regulator, we would love to have all the banking sector following the same principles. So the 25% remaining should be achieved very soon. And definitely we are considering that in our next step. Lastly, in this point, in order to to enhance our regulatory framework, like the guiding principles that we issued in 2021, which was the framework of the banking sector to understand what sustainable finance is all about. We enforce that with an educational paper explaining the main frameworks that in the world that they can go to as a reference. And one of them, of course, was the principle for responsible banking. So I believe that there is a crucial role, and hopefully next time we meet that I would announce that 100% are following the principle. Thank you, Nuran.
Thank you so much, Romeo and Walid. And it is indeed a positive indicator, seeing that all the countries, even at whichever level they are at, that we're all headed in the same direction with the same understanding of the importance and significance of sustainable finance. And I'm very happy, music to my ears, hearing about the percentages about Egypt. And it is also very interesting to see that the principles for responsible banking also were designed in a way that can be adopted by any bank at any stage of its sustainability journey, which is the beauty of it being developed with the banks. So this is something that we at UNEP-FI are very proud of, and we really look forward to have 100% of the Egyptian banking sector with us, and also to expand to Namibia and the other countries as well. So Louise, with that said, what do you see, or how do you see the regulatory environment changing in the next 5 years? And what steps can the regulators take to encourage more actively the transition in the real economy? And how can the SBFN support them on this journey?
Thank you. Yes, and maybe building on what has been said, and particularly around uptake of the principles for responsible banking, and there are some very, very good frameworks, as well as the principles for sustainable insurance. Within SBFN, we're framework agnostic. We're focusing particularly on helping the regulators on a journey to deepen sustainable finance regulation. So what we have pulled together based on members' experiences, and we now have 63 countries in the network, and almost, I think we're about to hit our 80th institution. And of those, we have ministries of finance, ministries of environment, capital markets regulators, banking regulators, and a few insurance regulators. And from their experiences, we've developed a roadmap, a progression matrix of what are the normal phases that a country goes through to develop these frameworks. And the first thing I want to say, maybe to encourage Romeo, is that the first 2 phases are under developing, which is where you make a commitment, and then you go through the process of formulating your strategy. And it's sometimes a good idea to take time to do that, to engage all the right stakeholders, to think about what works for your country. And some countries, South Africa spent 4 or 5 years in that zone before they came up with their technical paper on financing a sustainable economy. So it's absolutely fine to be in that phase for a while, figure out what works for your banking sector, for your financial sector. Then once a country has issued a framework, they move into the implementation phase, which is divided up into developing, where you develop the guidelines that support your framework, you build capacity, you develop disclosure requirements, and that's where Central Bank of Egypt has been. And Walid has made it clear that they are determined to be in the advancing phase, which is the next phase, which is where you have data coming in, you've got really strong implementing regulations, disclosure requirements, and you're monitoring what's actually happening in the financial sector, because the test of all this is a change in the behavior of the banks, and then a change in the behavior of the real economy. So I think the question is a very good one. And countries like China, what set them apart very early on is they brought in disclosure requirements very quickly after they brought in their guidelines. Incidentally, their developing phase was also slow. They had a green credit policy in 2007, but no guidelines on how to implement it. And they only brought in their guidelines in 2012. So we say within SBFN, well, we've had members say that it's a community of friends helping friends. So you're quite right. If you leverage what's been done in other countries, you can shorten your learning curve. So from developing, they move into advancing, and that's where we see regulation and initiatives across all parts of the financial sector. So you have capital markets, insurance being brought in more comprehensively. And then the final 2 phases are consolidating and mainstreaming. And there are very few countries in those spaces. So everyone is still working on deepening. And there are a few things I want to talk about, just mention in terms of deepening, the themes that we see. One, definitions and disclosure, making it very clear to the financial sector what sustainable finance is. Taxonomies are great in that respect, but they need to be designed not to be too complex for the market. Some markets can handle a complex taxonomy, some markets don't need a complex taxonomy. But banks and the real sector need clear goalposts. So a good taxonomy will filter down into the real sector, and companies in the different activities, whether it's clean technology, renewable energy, climate smart agriculture, water, waste, they will know what the goalposts are, and they'll know what the technical criteria are, they'll know how to pass the evaluations of the banks, and that's when you'll start to see adoption, and that's what worked in China. The other thing is inclusion. We've heard about inclusion. I think inclusion is the theme for Africa to bring to a lot of places, not just COP. One is that we need to watch out for unintended consequences of green finance that excludes SMEs or excludes vulnerable groups or certain parts of the real sector. For instance, the EU taxonomy and the South Africa taxonomy, which is based on the EU taxonomy, it hasn't developed its full set of activities yet. It's a work in progress, which means there's some parts of the real sector that are not catered for yet in terms of those taxonomies. So we need to make sure that we don't exclude SMEs through overly complex regulations. But the other is the intersection between financial inclusion and sustainable finance. And Egypt is one of the leaders on this, I think through the Alliance for Financial Inclusion, and there's an Inclusive Green Finance Group, and SBFN, we're also doing work on this with AFI and with Queen Maxima of the Netherlands, who's the special advisor to the UN on financial inclusion. And this will also permeate into just transition. We need to have a voice on just transition in Africa. So I will stop there. Thank you.
Thank you so much, Louise. This was very comprehensive, and I really liked the comment when you said it's a community of friends helping friends. It's really in the spirit that we can all work together as Africa and progress as we move forward. And also, it's very interesting seeing the many diverse topics. But also, as of the start of the panel, we've been hearing also from the regulators and the frameworks and so on, but I wanted to see the perspective of the financial institutions as they respond to these developments. So in 2021, both the Central Bank of Egypt launched its sustainable finance guidelines, and also the SEC launched their guidelines on sustainable finance principles for the Nigerian capital market. Now I wanted to ask you, would you please share with us some of the details on the response of the Egyptian banking sector and the Nigerian capital market? How did they respond to these changes, and what were the main challenges faced by those institutions in responding and preparing for this changed regulatory expectation? So, Dr. Mo, please.
Thank you. It's a very great question. In Nigeria, I think the response was not very overwhelming at the beginning, and I think that's understandable. In any emerging or frontier market, I think it's a huge learning curve to embrace the new wave of green that we're seeing. So it was a difficult challenge for folks to, number one, understand this quote-unquote new concept of green. What is the need for us, I think, was a difficult thing to try to get across. So capacity building, it's critical. I think it was an area that I think continually is a challenge. So there really need to be a strong and focused way to try to figure out what investor demand for grain would be and why they will make that demand. And also within issuer institutions, right? Collaboration within issuer institutions to figure out what is the need for them and also how to meet that particular demand. So challenge was capacity building. It was a huge, huge challenge, and I think it's still one. Then there is also the issue of costs. I think you need to bring about, I think, fee cost neutrality, because the initial cost of certification and administration when it comes to green issues are pretty high. So that's a huge, huge this encouragement, if that's the word. So it's really, we saw that. But recently, though, I think that particular challenge is being faced head-on. You have organizations like, I think, FSD Africa that has offered to actually write off the cost, the initial cost of issuance if that's an issue coming to market, so that you achieve that neutrality, if you will, compared to regular corporate bonds. Corporate issues, sorry. So for us, and also trying to mainstream the sustainable finance principles has been a challenge. But all in all, I think we're progressing really well. The sustainable finance principles were rolled out. Disclosure requirements are really mandatory. And I think those have been very well articulated, and we've seen a lot of uptake regarding the eagerness for market operators, capital market operators, to really embrace this new trend. Thank you.
Thank you so much. It's very interesting that although you're pushing a regulation and you're providing the guidances, you're also providing the capacity building and the enabling environment for them to be able to work on that. Thank you so much for this. And Walid, also from your perspective, if you can share the experience in Egypt also.
Sure, thank you, Nuran. Well, I cannot add much about what Dr. Moss just said, but capacity, I'll brief them in a few points. Well, capacity building was a main challenge. But before that, banks, commercial banks, understands that when the regulator issues guiding principles, then it's a matter of time to be binding regulations, right? So they need to prepare themselves because they knew it's coming and it's about time. And many arguments that we received that why are we opening this box? Africa's already green, right? And let's celebrate that. We are already green. We are not inventing the wheel on that. So, but it has to be done. So capacity building is a big issue. Bankers will remain bankers in any part of the world, and the return on equity and the profit is their main objective. So you have to be realistic as a regulator to understand this. So there is a type of resistance on that. And actually we have one of the big commercial banks from Egypt sitting in the room today. So they're also having everybody having this resistance in this. Well, the big issue also where it comes to resistance, banks having these taboos in mind that number of sectors won't be financed, which is not the case, and this was not the aim. In many of the developing countries, and of course like in Egypt with all the fossil fuel that we have, like in case in Nigeria and Egypt and many others, we cannot stop that, right? And we will keep financing such sectors, but we need to focus on the transition efforts. And the adaptation as well. Also, the buy-in from top management. What's it into the bank? So if the top management of any commercial bank doesn't have the understanding what's in it for the bank and to show the business case, then we will keep moving in the same cycle like we used to, till finally in Glasgow in Scotland, the COP decided to have a finance day, and then we start to kick in as financial institutions. Where to start is a big issue for the banking sector. We don't have the knowledge. For example, in Egypt, we have 36 banks. Not all of them are on the same level of knowledge on the topic itself. So banks need to understand where I should start. Should I start capacity building for my staff? Should I adopt any of the principles or the frameworks that internationally published and we know almost nothing about it as a commercial bank? So these type of issues. So our approach in Central Bank of Egypt is to issue first non-binding guidelines, which helped a lot. And thanks for the colleagues in SBFN again who helped us in this journey, and of course UNEP. Those guidelines will prepare the market, and issuing with those guidelines is educational papers, explain everything. We need to have an approach of business enablers. Yes, we are the regulator, but we are there to lead the market and take them by hand through this journey. Like you just mentioned, Louise, now about the EU taxonomy. Okay, we've been all over Europe, and the European taxonomy, which is the main source of taxonomies in many countries, well, it doesn't work in Europe. And we met a lot of commercial banks in Europe. Well, it's not well established yet, but it is there since 2020. So I believe that there's no one size fits for all. Having certain principles as a base, and then you can tailor-make your own case according to your economy and about your goals on the national level as well. So basically that's the approach we are doing, and then ended up by issuing our binding regulations in November last year, right before COP27 in Sharm el-Sheikh that Egypt hosted. And as Louise was mentioning, now it's the banks understand, and the banking sector understand that it's a mandate now. It's not an option anymore. It's a regulatory framework that has to be compliant. Thank you.
Thank you so much, Walid. And I do believe that a phased approach is definitely excellent, so that before it becomes enforced, in a sense that it becomes voluntary at the beginning, I think it gives them, the institutions, a sense of, if I can say, a dry run of how it would be afterwards when it's mandatory. And also it's very understandable that each country has its own unique challenges and its own areas of focuses and all of that. But there is this misunderstanding or misconception by a lot of people that we see across the world, that sustainability is not there to hinder the development and the growth and profitability and all of that. In fact, it is there to support it to happen in a sustainable way that can ensure that the growth that is happening does not affect us in the future later on. So I think this is one of the elements that needs a lot of addressing and encouragement also when discussing with the institutions. And I really like the approach that you were taking. So on a final question also to Romeo, if I can ask you. So as we speak about the profitability and all of that, how can we strike a balance, taking account the regional or the national specificities in Namibia, for instance, while ensuring that the regulatory approaches are also aligned with the international best practices? How do you align the local efforts with what is happening globally?
Well, in terms of yeah, maybe first off to say thank you for hearing the invitations are open. I think we will definitely make use of that going forward. But also, I think very invaluable lessons that we are learning from the fellow regulators around the table, hearing what they have done thus far, things that can inform our policy as well. I think where we are, we have recognized that climate-related risks have some impacts on the economy as well as on the financial sector. And I think that's why we've made efforts to establish the National Financial Sector Strategy and to speak to those aspects specifically. The second aspect that we have also embarked upon before I get to the balance is that we have also similar, like other countries have already embarked on capacity building and making sure that we are in a position to actually analyze and understand this risk that we are facing. And I think from that, it will really help us in setting the scene right, and in building the appropriate principles going forward, which we hope that will culminate into the guidelines that we will issue. But coming to the balance, I think there are a lot of green shoots in the country happening. On the green front, there are good initiatives coming off. But there are also the recent oil and gas discoveries in the country, which I think sits on the opposite side of where the world wants to go. So for us also in that space, there are a lot of initiatives that we need to embark on to really understand the impacts going into the future. And of course, again, calling on the group of friends around here to help take us along in better understanding and doing an impact assessment of what these things could mean to us. Because we have to go into the future ensuring that to bring prosperity to our country, also make sure that we have a well-balanced approach going forward. The interventions that we have done to ensure that this balance are maintained was also to make sure that whenever we develop these principles that we would want to roll out to industry is to consult with them, and then of course our financial sector strategy will also be a consultation process for them to also then give their insights into that. So it's not an imposed aspect from the onset, but we also would want to make sure that it's principle based, such that it provides scope for or much wider scope in terms of the adoption instead of from the onset enforcing it. So allow the industry to grow into it, because through that they will also then build their own capacity. Thank you.
Thank you so much. And it is interesting to see that we take an initiative and contextualize it and take it on a national aspect. And this is the best way to ensure that the principles and all the elements that are included are attainable and achievable, also when it takes into account all the national aspects as well. So I have with our one final question before we close our session, if our speakers can share in a few sentences an advice or a tip that you can provide to the financial sector for succeeding in efficiently and effectively adopting a sustainable finance business case. So if we can have a quick round, Dr.
Okay, thanks. Quickly, I think a couple of things, just one maybe. I think there's been a recurring theme even in the previous round conversations that happened before we came on stage, which is really there should be coordination and collaboration. And I think that is very critical amongst those in the region, countries in the region, to leverage and share best practices, to learn from the challenges and mistakes, and really focus on what works. I think that is really key.
Thank you so much. Louise?
Thank you. Yes, what he said. So I would completely agree. I think a key theme that has come through for us is consistency and coordination in the governance of the financial system when it comes to sustainable finance. And we had an analogy of a car earlier, but as the panelists were speaking, I had this vision of people, designing airplanes, different airplanes, but they're all doing it in close proximity to each other. So you can go walk over to your neighbor and see what he's done with the wings, and and then he tells you, well, this didn't work so well, I crashed on the last flight, but I would recommend you do the following when you design yours. And to the point about the EU taxonomy, yes, I think there is a delay in terms of picking up these types of things. It is quite complex. And maybe there are teething issues with the EU taxonomy, but they've done us a huge favor, doing it so comprehensively and demonstrating some things that are great, which is they do no significant harm requirements, they're social safeguards. So they're building in environmental and social due diligence into the rollout of taxonomies. Together with China, who were the leaders on this initially, they've given us a new lexicon of how you manage sustainable finance, which is complex, but it could turn out to be the clarity that we need in the market going forward. And my take-home message would be we need to use these new tools to really understand what's going on. And Walid talked about the fact that the Central Bank of Egypt has made an effort to understand what really works, what will work for the banks. Don't give them something that's not going to work for them. And what China did is they tracked very early on what was the result of green lending. So their taxonomy was initially issued so that they could give clarity on what the banks needed to report on. So if you tell the banks 5% green lending, what do you mean by green lending? So don't confuse the issue by letting them make it up themselves, because then you'll have endless disputes as a supervisor. But rather, let's have the same thing, and it might not be perfect. But because of that, and because of their green credit statistics system, they have multi-year data that shows a strong link with lower credit risk. So they've looked at non-performing loans, and they've seen that the non-performing loan ratio for green credit is much lower than for traditional credit. And Bangladesh Bank is also reporting very similar differences. For instance, they've mentioned in the region of traditional non-performing loan ratio is 8%, and they might be looking at less than 1% for the green lending. And they've also been prescriptive. But at least they've got data. It might not be the perfect taxonomies, it might not be the perfect process, but they have data and they can find out and answer the big questions. So the big questions are, is capital going where it should? Are we achieving what we should? And do we need to fix stuff that doesn't work? So that would be my take home. Thank you.
Thank you so much, Louise, for that. That is an excellent view as well. Romeo?
Thank you very much. From my side, I think as a final comment, I think echo the same sentiments as Doctor. Coordination, cooperation across regions, across barriers, and even with industry. I think that's fundamental in taking us forward. And I think the suggestion that I would want to put forward to industry is actually to come up with a cross-functional team from a Namibian perspective to actually give insights into what we would want to develop going forward. Thank you.
Absolutely. Walid?
Yes, thank you. Well, if I'm in a position to give a tip about the topic itself, well, it would be know where you stand. As a regulator, knowing the institutions that you are regulating, where they stand, it's the most fundamental and crucial part. Before we started our journey, we prepared and we made a gap analysis project, because we wanted to know if the banks that we are regulating are sustainable or not. Are they doing sustainable finance or not? Surprisingly, after the analysis results, we discovered that actually all the 36 banks doing sustainable financing, but they don't know it is sustainable financing. And it's not labeled as a sustainable finance. So knowing where you stand exactly with numbers and examining each bank portfolio will help you out and will save the direction of the regulatory framework in the future. It was crucial for us to know all of those informations and to test the readiness of the market, because we need to be realistic. We need to put achievable goals as well. So this would be my main tip. Also, we need to get rid of the perception that when you go sustainable, that does mean that you will lose profit. It's not anymore. Louise just mentioned about the non-performing loans, but also the value of the assets on the long term that might be in danger because of all the climate change issues should be considered. So climate risk should be one of the modules that all bankers should approach, even to be included in the credit courses that all the banks are taking. It's not a privilege anymore. It's a mandate now to understand that on the long term, even if it is costly right now, but on the long term, it is definitely a savior. Thank you.
Thank you so much to all of you for the excellent remarks. And there is an architectural analogy that when building, when constructing a building, it's very important that we have very solid foundations. And I think the foundations here lies in the understanding, knowing where we are, and the capacity building. So it's very important that we have the strong, we stand on a strong foot at the beginning, but also in working collaboratively in that. And when saying working collaboratively, as Romeo was mentioning, it's not just about working together across different sectors and across different institutional regulatory bodies, but also the collaboration between the regulator and the financial institutions themselves. It's very important that the institutions also proactively engage, they start to take action, that they don't always wait for the regulator to set the path forward for the national direction, but also the same way that the regulators also work to provide an enabling environment as well for the institutions. And I think with all the discussions that we've had now, that we see that there is a very positive outlook for the Africa and Middle East region. There's a lot of developments that are happening, and we're actually in a good way forward. And I really look forward to all the further achievements and the initiatives that will be coming up, and the support that you will be receiving also from the different institutions such as SBFN and UNEP-FI. So thank you again once more for your valuable insights and interventions, and thank you to everyone for your attention and listening. Thanks.